Hello, delighted to be here once again with my good friend and colleague, Jay Marling, for one of our fun impromptu chats. Welcome, Jay. Yeah.
Thanks, Steve.
One thing I want to start with is the generational wealth transfer article that we published last month. This shift in assets is quite significant. Would you like to tell us more?
That was a great article. I learned a lot. I think the first thing that really impressed me was the sheer scale of the wealth transfer that's going to happen. And I think we're talking about, I don't know, what is it, like $84 trillion of wealth transfer in the next 20 years, something like that. And it's going to be going mostly from baby boomers to my generation, the Gen Xers, and millennials. There'll be a little bit also that goes to Gen Z. So, I think it's important to recognize, how these groups differ from baby boomers in terms of their approach to investment, right? So they tend to be more tech savvy. They want to rely more on data and analytical tools. And I think they also have a greater willingness to ask for help and lean on third-party expertise. So I think all of these factors really contribute to a more sophisticated and a more strategic approach to investing.
Sophisticated and strategic, that's interesting. Would you like to sort of go into that a little bit more?
I guess, it really means that the new generations are going to be maybe a little more creative in how they seek their opportunities. I think my mind goes to things like private equity and alternative investments coming into vogue these days. And obviously, commercial real estate is probably the largest of the alternative investment, subsectors, right? So we're talking about larger, less liquid, maybe less regulated assets that are going to offer better risk-adjusted returns. At least the perception is that. And as we point out in the article, this group of investors, they're also just more financially literate. They're focused on preserving their capital, so we're not seeing this same, rags to riches to rags generational wealth transfer that we've had in the past. I think we used to call it like the three generation curse, right? There's much more. This is something I think the next generation working much more consciously to avoid.
Yeah, we hear about that third generation squandering wealth all the time.
Yeah, not so much anymore though.
No, they're getting better.
Yeah.
So in terms of the practical application for real estate markets, tell us where that's heading.
Look, I see two major changes. I think first, there's a little bit of a movement afoot that's going away from the core four, and that would be multifamily, industrial, retail, and office. Those are sort of traditionally where the real estate investment has gone. They're pretty well understood asset types. What we're seeing now is a move towards less mature, specialized property types like self-storage, student housing, build to rent, single family residential, of course, data centers also becoming increasingly important. So I think the view is that these sectors, these areas provide more opportunistic plays. But there's sort of a second element of this as well. It's a little differently oriented, and I'd say, look, there's a growing demand for more innovative real estate vehicles. We're seeing this in non-traded REITs and private debt funds. While these are attracting a lot of capital, there's also really a demand for greater transparency, in these vehicles. And so we're seeing investors demanding more frequent sort of pricing updates, increasingly wanting monthly or even daily liquidity. And as we know, trying to spot price commercial real estate has always been a very difficult exercise, if not impossible. But we're seeing big strides being made in that, and we're getting much more real-time information. And we're really doing that to sort of meet the needs of the next generation of investors.
We've talked a lot about changes, but what stays the same?
Look, the fundamental nature of real estate hasn't changed, right? It's a physical asset. It's illiquid. It requires a lot of hands-on management. So no matter how advanced the technology gets, and things like AI and all the data tools that we have to assist us, and they're certainly helpful, right? What they can't do is they can't replace the experience or the intuition, the ability to interpret nuanced market signals in real time, behavioral things that are happening in terms of how people make decisions or the psychology behind a transaction. These are complex and unpredictable and highly social things that are happening. No amount of technology can fully replace the need to get out there and interact with the physical assets and have the meaningful, the real conversations with stakeholders. And I think that's what we all love about commercial real estate, is it's really a people business.
Yes, that's what lured us all in, the people business and the hands-on aspect. Well, thanks for coming in
Absolutely,
and talking about that, Jay.